All right. Good morning or good afternoon, everyone. No matter where you're zooming in from, live streaming from, good morning or good evening, afternoon. It is Monday, August 18th, 2025, and coming to you live from Sterling Stock Picker. Let's see, NASDAQ, Dow, things are kind of moving sideways. The market hasn't really had a definitive move either way today. Kind of choppy performance, not much going on, not much to report. Earnings coming out this week are basically retail. You got Home Depot, Walmart, Home Depot Tuesday before the open, Walmart on Thursday before the open, and Ross. Intuit is Thursday after close, as well as Zoom. So, mostly, Lazy Boy, here we go, Tuesday after the close. Mostly the big key retailers. I think Lowe's, I don't see it on the list, but I think Lowe's is also posting this week. I just don't know why it wouldn't be on this list. Let's see what happens this week. We're going to find out is the consumer spent. There's been a real shift toward people saving more money, the ones who are in a position to save rather than spend, and people are being much more cautious with their money and their budgets. So let's see how that's going to affect some of these stocks. But when you look at like a Home Depot and Lowe's, that is kind of insulated, I think, from people saving simply because, there's been so much destruction and damage done to homes throughout the United States and in Canada that people, are going to be purchasing items and rebuilding the best they can. So those are, again, kind of exempt. I think I've got a good feeling about earnings for Home Depot this week. I think they're going to be actually fantastic. But we'll see. Target before open on Wednesday. And I wanted to point out, from our home page here, when you scroll down, you get to this section called Most Mentions in the Last Week. This is a really good place to find some winning stocks. And it shows, basically it assesses all of the mentions and it gives a rating, whether it's positive, neutral, or negative regarding companies. So really check this part out in the software to see, if you're someone who's like looking for an average risk stock, you come down here, Meta. Okay, Meta is in the most watched in our community. It's also industry best, but it's also in two different indexes, NASDAQ 100 and S&P 500, 4-star rating, and the mentions last week were positive. So, it just might be an interesting thing for you to look at and see if you can find some decent stocks here. All right, as usual, we're going to look at the stocks, the percentage above their 50-day moving average in terms of the price above the 50-day, and we're sitting at 57.33% of all stocks trading above their 50-day moving average. So basically it says there's a lot of opportunity left in this market to the upside. Gold has had quite the move the last few weeks here, up 34% for the year, and silver up over 30% as well, maybe 32%. I've compared on these charts silver and gold to the US dollar. So here's the US dollar down here declining for the year quite a bit, and the precious metals moving higher. Platinum, big move of late here early or mid-July, up to over 2,000. These are in Canadian dollars, by the way, 2,021.92. It has since pulled back quite a bit. A huge pullback actually from 2,000 down to 1,800. Now we're leveling off at 1,844. So there you go. This is interesting. This is a site I use, by the way. I think they're terrific. Silvergoldbull.ca or .com, depending if you're in the States. All right, so let's talk about Big Bear. Earnings came out last week. They were just awful. And, you know, this stock has had its issues along the way, no question about it. It had a horrible former CEO. They finally booted her out. They got her out, and they made an acquisition late last year. They've been trying to integrate that acquisition into the company, and you know, to most people, this looked like, I mean, it looked bad, right? The earnings, I mean, it just dropped. But it quickly recovered, and that's what was interesting. When after earnings were announced last week, in pre-market, earnings were announced last Monday after the close. Pre-market Tuesday, the stock hit $4.23, $4.23. It opened up higher than that, and the closing low price was $5.84, something along this line, right around there. Excuse me, maybe it was a bit higher actually. But at any rate, it has tested the SMA 50. It is it's currently below the SMA 50, and the only average it's above is the SMA 200 at 428. So the SMA 200 is showing lots of support for the stock. But when we move down to the MFI, I mean, it is clear to see the stock is oversold, and the MFI got as low as 34 that was earnings day, right? On the 12th, right around there. So the stock really pulled back, but then nothing but buying ever since. Like big buyers coming into this stock, and it's off slightly today. It's the $6 range. Personally, I've had people ask me on this platform, what are you doing after that horrible earnings? I'm buying the dips. I've been very transparent about how I've been buying Big Bear, and whenever it pulls back, I buy the dips. And I've been buying the leaps for this stock, the 350 strike and the 7 strike, so 2 different strike prices, as well as adding some additional shares as well. So that's what I've been doing personally, but I'm a believer in the stock. I'm a believer in the sector it's in, knowing full well that things are becoming more and more, let's just say us being more and more closely watched, tracked, and traced. And Big Bear helps in doing that, but they also help in logistics, and I'll get to that in a moment. But from these metrics here, the stock is not looking great, but it doesn't mean it's not a great company ready to go to the next level. And I think by 2026, by next year, we're going to see this stock just absolutely take off. You know, this is their year to get their act together. They're doing their best, but here, you know, those earnings were just awful in terms of what they posted, but now it's out there. You know, I feel like it's out there. The numbers hit. They were not at all. They were just quite low. And, you know, and the market got to digest that, and it didn't slow down really. Like, you know, the stock ran up to 740, 750 before earnings. Let's see, right around here, this was like the bump before earnings. So intraday was right around 750, and then it started pulling back after earnings. So the pullback happened after the stock had a decent run, and I think at this $6 range, this might very well be the low point that we see the stock moving forward. That is my best estimate in terms of, you know, how to play this thing. So knowing that it could very well be sitting at the low point, it could definitely and will move higher from this point. So it just depends on what your goals are. If you're looking to trade this short term, you would not want to buy this stock, because I just don't see where it's going to have a big breakout move anytime soon. There's nothing really being set up technically where there's a golden cross or anything of that nature. unless there's big news coming out of a big contract, something to that effect. Now, there was news here recently that they partnered, BBAI partners with Narval, for, I hope I said that right, for cargo security in Panama. So as you know, Panama is the major core global trading, global supply chain, shipping segment. And it says the collaboration between Big Bear and Narval represents a pivotal step in applying AI to safeguard the global supply chain. Starting in Panama, the initiative not only enhances security at one of the world's most vital trade hubs, but also positions both companies as leaders in shaping the future of international cargo management. For investors, Big Bear's growing role in mission-critical applications underscores its potential for long-term growth. I agree with that. They've still got a $382 billion backlog of orders. Those orders have to start hitting their books. They actually have to start coming into the company as revenue instead of just future orders. But I think we're going to start to see that more and more. I'm noticing, you probably are too, that the U.S. is very geared toward, military presence, tracking and tracing all citizens. And everything from currency, right, the dollar, to digital currency. So we're going to start to see a shift in that going forward as well. I think that's starting to really come into full force here. Probably, I think we have like a 3-year window where we can still move around like we desire to. We can still transact with cash. But that window is closing, and if we have 3 years, then I think we're lucky. We can count ourselves lucky. So with that being said, I came across this. My wife actually found this for me. This great interview with a guy named, here, I want to get this for you. His name is E.B. Tucker. First initial E and then a B as in boy, Tucker. And he was interviewed, and the interview is called "Capitalism is Dead: How to Thrive in the New Managed Economy." And he talks about how, this is basically everything is rigged to go up. And I've always been saying that we exist in this environment that we're playing this, investing in this equity market that is totally rigged to go up. And we can't be afraid of it, but we also have to be kind of like, kind of on guard, right? Like kind of just be ready to shift if we have to, if things turn south. So you have to be, as an investor, I think this day and age, a very nimble investor. You got to be nimble with your assets. You can't really lock things in for long-term, like buy and hold long-term like we used to be able to do. It's just a very different environment right now. And so once we're aware, he's got this great analogy of knowing the game that you're playing. And if you know the game, and the game is tennis, you wouldn't bring a golf club to go play tennis, right? So he uses that analogy in this interview, and I thought it was brilliant. So have a listen. Tell me in the chat, what you all think about that interview. So that's my thoughts. I hope I'm clear on Big Bear. You all know it was my number one pick for the year. I'm a huge believer in this stock. It's doubled this year already. Will it double again? We'll see. That remains to be seen. But in terms of how to play it, I think you buy it on the dip, and you can do that a couple ways: buying the individual stock or buying the LEAP contracts. If you're not familiar with LEAPs, all you do is go to options view, and those are long-term option contracts on a stock. So you just look at the expiration, and you can go to January 15, 2027 is the furthest out that you can go in terms of maturity. But if you look at the 350 contracts, they're well into the money, and you're only paying $3.60 per contract. So what you're able to do is, with the stock being at $6 and a strike price at $3.50, you're basically saving a lot of money instead of paying let's say if you're buying 100 shares, $600 to buy 100 shares, you get to control 100 shares of stock at a 350 strike for $360. Like, I think it just doesn't get much better than that in terms of a potential investment for you. So that's how I've been doing it. So you just have to ask yourself, if you think that Big Bear stock price is going to be at least above $3.50 by January 15th of 2027, then this would be a good investment for you. And you don't have to hold it all the way. It's not like a fixed income bond instrument that you have to hold to maturity. Not at all. It's completely liquid. You can sell it anytime that you want, entirely up to you. So you've still got the flexibility of like owning a stock. You don't quite have the benefit of owning the stock because you can't sell a covered call against it, obviously, because it's not shares of a stock. But if you were to exercise this call at a 350 strike, then you have the ability to buy your 100 shares for $3.50 per share. So it gives you a lot of flexibility. You can just trade the contract or exercise it. You know, who knows? The stock may be at $20 by then, and your strike price is still $3.50. Like, it's just so cool. So that is my recommendation for Big Bear. I hope that's helpful. Let's talk about what the guys did over the weekend. They finally fixed this scrolling issue for this pick stock search results. And also, speaking of pick stocks, that we removed the buy now toggle for pick stocks. It was a toggle that you could, click and pick stocks, and it would just show you our buy now stocks. And oftentimes that condition was only present when there was a golden cross taking place for the stock. And that doesn't happen every day. And it certainly doesn't happen for all of our 5-star stocks. So it was showing limited, it was just showing limited number of stocks for people. And we decided, you know what, let's just get rid of that thing just to help you not get so caught up in, it's got to say buy now. If it's a 4 or 5-star rated stock in our system, that's a buy. So we decided to, improve the software by removing that. And then they also added some more Brazilian stocks from the Brazilian Stock Exchange. So there you go. Speaking of Brazil is looking at very closely their interest rates, and they're talking about do they still want a 15% interest rate? Like, interest rates are super high over there. It's devalued their currency quite a bit. And, we're going to see what happens with that. If they choose a different path to reduce interest rates, that's going to be, for you Brazilian investors, that's going to be an interesting situation for you, because any type of fixed income asset that you might have will go up in value. And chances are good it's going to actually help the economy quite a bit, therefore help stock prices as well. So just keep your eye on some Brazilian stocks if you're in Brazil as an investor. Hope this was helpful for everyone. Have a fantastic week, and I'll see you next Monday.